Okay, welcome everyone. I'm going to do a closing market wrap video today with the CPI and some of the market movement. I just want to kind of cover how we closed and really talk about where I think the market's heading here in the next few weeks to maybe months. So I want to talk about that. If you're new and you're interested in learning this as a skill set, follow along for a little while. And then as you see things kind of start to play out, we don't get every trade right, but some of these we've definitely gotten most of the trades right this year. And, if this trade starts to play out that I'm going to point out, then check out my stock market technical analysis course. It really explains how to spot these trades. So again, check that out if you're interested in learning this as a skill set. Finally, guys, I have the membership live. I've been in there commenting. I can't promise I'm not going to be active in there every single day, but if I see things that are interesting, and right now we're in kind of a pivotal time with the CPI coming out. I think we're about to have a change in the market, so I want to point that out. And so I'm a little more active in that membership group, giving you guys feedback and pointing out charts as we go along throughout the day. So if you're interested, join that. There should be a join button next to your subscribe button, or if you look in the description below, there should be a join link there as well. Okay, let's get into it. We are going to start off with triple Qs. So this morning, I really kind of talked about how I think nothing really changed from today. Really the last few days. All of this week, we're just right here at resistance. We have not broken out. Nothing's actually changed. Now, I do think there is a possibility that we will have a short-term breakout. I think it's going to be a false breakout, but there is the possibility here. For me, it's just not worth trying to game the rally. All right. Again, we got long. I started to get long back down here in this area. This is where we got long. Go back and look at my videos. All my thumbnails are talking about rallies, and you'll see the subscriber comments are saying, no, we're going to more downside. Again, this is the nature of being, counter trend, I guess. You are always going against the masses, okay? And that's just the way it goes. The markets it's usually the minorities that make the market or that make the money in the market. You need to be on the other side of the masses, okay? And then when the masses transition to your side, then that's when you make your money. So this is where we wanted to be long on triple Qs down there. My final target all along has always been right around 330, okay, right in there. That's always been my final target. I don't see us going much higher. There is the 200-day simple moving average in triple Qs, which is way up here at about 342, 343. There is the possibility that we run up and hit that, okay? I don't know if we will. I'm not betting it, but at the same time, if it happens, I could see it happening. However, very high likelihood we get rejected on that 200-day moving average. The other thing, though, I want to point out, if you look at the hourly chart, nothing changed. As bullish as today felt, all right, to people, if you're just chasing price action, then they still couldn't take out the bullish divergence, or the bearish divergence. So you'll see here on the RSI, let me zoom it in, okay? The momentum wasn't really that strong. Yeah, the price was moving higher, but the momentum and the participation in that was not that strong. So that just tells me that negative divergence has a high likelihood of telling you that you're going to have a reversal. Now this can continue. We can continue to kind of diverge and make higher prices while the divergence builds. But until I see this get burned through to where all of a sudden the momentum makes a new high, then I have to go with the fact that this negative divergence and the fact that we're at major resistance, going back to the daily chart here, all right, is telling me that we are still in a downtrend. And this is just a back test of that, resistance area. In a downtrend, you sell the rip at resistance. So if you shorted here, you made a bunch of money. If you shorted the kickback here, you made a bunch of money. If you short the kickback here, I think you're going to make a bunch of money as we trade down to the next level, which I see at about 239.60, 239.50. And we could probably extend this out like that. And I think they come in together. I think we run into those here in the near future, hit them both about the same time. Good solid support down there. All right, that's it. That's all I got on triple Qs, and I still like it. I'm still short. IWM, if I go to the hourly, you'll see it would pretty much look like the algos were just in there, just a mechanical bid today. Running stops, or this is, and this also looks like short covering. Doesn't look like impulsive buying. It looks more to me like short covering. If I go to the daily, not much volume. You didn't have much volume, and there's really not been, there's no indication of breakout volume or anything going on in this up move. So it's likely just short covering that we're seeing. Okay, so in general though, you can see this. We had a bearish rising wedge pattern. Got pretty whippy over the last few days because it's right ahead of the CPI. This is the market makers playing games. We kind of broke down, popped to the top. Right here on the in the member channel, I sent out a message saying, okay, this is likely going to fade and fail right here. And then sure enough, faded, dropped down. And then today gapped up right to resistance and pretty much traded right underneath that resistance. All day. So just a trend day straight up right under resistance. Looks like we're running stops. I think we're at or near the top of this rally. Okay, I can't say for sure that this is the exact top because that's just impossible. But to me, it definitely feels like we are close to the top. The 200-day moving average is right here at 200. So yeah, we could run up and hit that. Maybe we gap up and hit that right there tomorrow. I don't know. Maybe we run up and hit that, then it fails. The risk reward though, and that's again, trading is all about taking trades that have good risk reward. Okay, you don't want to chase moves and just chase it when you're really close to major resistance. The profit that I see is more to the downside, making money on basically shorting this. Now, the 200-day moving average is about that's about 2% up. So, likely going to get rejected up there. It's not guaranteed, but it's probable. So you have about a 2% more upside. And then the downside, if I'm right on that next leg lower on triple Qs and IWM, I think we head down to this level right about, it's somewhere right in here, 159.33 or so. And so I got a 2% possibility of more upside, and the downside is about 18%, or we could even head down to, some of these lower levels. So my risk reward ratio is not favorable to be long or to be taking any new longs or any of that. So and I'm starting to see the comments of everyone saying I'm always wrong and this and that. That's just the perma bulls. They come out, the people that are saying that likely didn't catch any of this move down. They probably rode their longs down, and now they're getting this, and they're starting to get hopeful that we're going to go off and make new highs and their positions are going to be profitable again. Okay, this is the slope of hope. All right, bear markets fall the slope of hope. And right now we're in the hope phase where everybody hopes that this is great and this and that. Okay, the CPI, I want to talk on that real quick. The CPI came out today, and it was, and we can look at oil. I want to pull up the oil chart just to talk about this, because I did talk about this the last CPI reading that came out. So the last CPI reading that came out was like a 9.2 reading, very, very high. But you can see that oil had come off, and oil is a huge component of the CPI, and also like food and things like that. Oil had come off like 28-30%, and we got that super high CPI reading. Well, that didn't make sense. It almost like didn't account for the drop that we saw in oil. And then today we get a CPI that has come off a little bit, and that's just accounting for the drop that we saw in oil. So it's almost priced in, because this chart was obvious. It was obvious there was a drop in oil, and when you saw that high CPI reading, it was obvious that we had kind of hit peak inflation. You go back and look at my chart or at my thumbnails for the last inflation reading, and my thumbnail said I think we're at peak inflation. And that's because I thought that we were going to come off because the commodities had come off, and I thought that we had hit peak inflation and that was going to start to come down. And that was one of the reasons why, going back to the triple Qs, that I was bullish and wanted to be long the triple Qs down in this area, okay? Because of those commodities that I had seen sell off. All right, that trade's dead. That trade's played out. That's over. Anybody who's kind of on to that trade or thinking about the CPI coming off and that's going to be bullish, it was bullish, okay? It was. And it was good enough on triple Qs for a rally up about 21% rally from the lows. And that's because of that CPI hitting that peak inflation. Okay, so I think we're on to the next trade, honestly, and the bag holders are going to be the one who see that CPI coming off as a bullish sign, and they're taking breakouts or they are they're going long. And again, this is just my analysis, my opinion. Now, my trade isn't going to play out, exactly the moment I call it, and that's just not how the trading strategy works. Sometimes we can get it like that, but when you're talking the broad market, we're looking for kind of a topping phase, right? This can take a couple days or weeks even. Maybe it does this, maybe it does this. I just don't think we're going much higher than that area. So that is, how I'm playing it until I see those divergences get burned through or some sort of change. I don't think we're going much higher, and I want to be short. And We'll know in the next few weeks whether I was right. But again, by the time I'm right, the people that are jumping on board weeks from now, if we do see more downside and they're jumping on weeks from now, they're late to the party. So, you have to anticipate some of this stuff. It's just part of the game. You have to anticipate where the market's going to head in the future and then manage the risk. If you're wrong and if I'm wrong, we'll stop out and we'll exit. I really don't want to see this above the 200-day moving average. You could get a pop, or maybe a one-day pop above the 200. I'd probably, I'd be willing to probably let that go for a day or so, but nothing really above that. Anything above that, you'd want to stop out because you're probably going to go on to new highs if you can do that. But I don't know what the catalyst for going on to new highs is going to be if we've already seen this rally. So quick little scan through the FANG stocks. So, kind of mixed right now. But again, Amazon, below the 200, nothing's technically changed. Looking at the hourly, still have negative divergence. RSI looks like it's about to start to turn down to help confirm that divergence. PPO, that one's still kind of pointed up. Maybe we'll get that bearish crossover right there, but still looks good. Negative divergence below the 200. So again, this is where I want to short at. I want to short, just like in a bull market, you want to buy tags to the 200. In a bear market, I want to sell or short reactions into the 200. That's where we're at right now. So maybe we chop around. I could see they might try to run stops like that and then reverse. Okay, so that you got to give it a little wiggle room. And then again on Amazon, big. Look, this is why we're in a bear market, guys. Big bull market trend on Amazon. All right, going back to 1997. All right, so this is all the reactions we've had, big bull trend, and that's done. It's broken. So this is a back test. Okay, so maybe we could, again, they could do a full back test right there, but this was a big sell signal on the weekly saying, okay, that bull market is over. So you get the first leg down, you back test, you roll over, guys. So in the next few months, maybe years, I don't know how long it'll take, but 80-30 on Amazon is where I'd look for this thing to head. And that's going to take a while. This is a weekly chart. Google. All right, where'd Google close? Well, we closed pretty much right at resistance. You can see basically right there. And, that's kind of that high right there. And they popped it a little bit intraday, but sold it down into the close, and we pretty much closed at resistance. So nothing's changed. Now, yes, we could pop and hit that trend line right there. That might be the final move. Okay, maybe that happens. But again, it's limited upside, all right? And I don't know if it's going to hit that trend line. That's the point I'm also trying to make. If you try to hold out for the very last penny or the very last area of resistance, usually when it's an obvious level, they're going to step in early and not give you the opportunity to get a good key position. So the market doesn't like to give people perfect entries, and oftentimes you'll miss the boat. So I'd rather wait and just hold out. But you can see here, if we rally, that's a rally. That's about 5.5% more to go, potential upside and on Google. And then the downside is, I see the downside all the way down here at about 94.36. Let me check that again. Yeah, that's our That's our bull trend. So from where we're at, 5% upside and potentially 20%. 1 to 4 risk reward ratio. So again, doesn't pay to take that kind of risk. Anybody who plays poker would know about pot odds. You don't want to you don't want to take a big bet or make a big bet when you don't have the opportunity to win a big pot. All right, that's how you end up going broke over the long run in a poker game. So this is very similar. Okay, so Microsoft popped above what looks like resistance right here. Okay, we popped just slightly, not that impulsive, guys. Yeah, it's a gap up, but where was the follow through? You gap up and just no real consistent buying throughout the day, just kind of a grind. That's short covering. All right, that's short covering, and then we again, I think it's going to fail here. The 200's right up here at 294.75, so we could do that and then roll down, but to me it just looks like it's going to fail right in this area. When I look at the hourly chart, divergent high, and there's a divergent high there, and same on the PPO right there. So this gap up, look at that. I mean, is that impulsive buying? No, that's a gap up, and then that's shorts coughing up their shares and covering, and that's what that is, and likely institutions shorting. So that's it, guys. That's all I got there on Microsoft. Apple, going back to the daily. So again, all right, Apple here gapping up, not that impulsive today. Up 2.6%, but most of it came on the gap. Okay, so you can see the hourly. I mean, there was some buying here in Apple. A little bit more, but a big chunk of that came on the gap. So just want to point that out. Negative divergence remains. All right. So let's keep an eye on that one. Now, if they can burn through these divergences and make a new high, then maybe I'm wrong, and we'll start to evaluate that as I see it. But as of right now, we've got negative divergences pretty much across the board. Some of these were just barely above resistance. And this is the area that if they're going to gap it down, this is where they set the trap, okay? And I suspect that comes on the Fed saying they're going to still be hawkish. Okay, Meta, not much here. This one hasn't really rallied too much. Meta's kind of struggling. So I could see Meta maybe being one of the stronger ones, maybe getting a little more rally up to 202.66. But I have mixed opinions on it, honestly, for now. Tesla daily chart. Okay, where did we rally to? Well, we rallied right into resistance. All right, we had a trend line to watch here. We had a breakdown, a back test, and we should reject right here. All right, doesn't have to, but it should. Okay, so I'm looking for that to reject probably tomorrow, or maybe this grinds along for a few more days, or drifts sideways and then pops, and it can do some stuff like that. But I see limited upside on this. Again, negative divergence on the hourly. You can see if let's drag that down. Just nothing's changed. Negative divergence. All right, and that's it. And let's look at the semiconductors. SOXX. You can see here on the daily chart, a couple things going on. All right, there's your downtrend line. We got another reaction. So resistance. Okay, we had a bearish rising wedge right here. If I go to the hourly, it kind of shows that. There's your bearish rising wedge pattern. Negative divergence. Breakdown and sell signal. Today's a back test. So we can go up and hit that. Maybe test this area again. Again, it should fail right there. We shouldn't go much beyond that. So risk reward, there's just not a lot of, it's just not worth staying long or being long. And it's more favorable, at least in my opinion, to be shorting these things for the next leg lower in an ongoing bear market. Okay? Remember, bear markets follow the slope of hope, which means when you have a bear market rally, they suck in all these bulls. They suck in people who are bullish, who have been taking on losses and are just happy to get their money back, and they see the light at the end of the tunnel, and just then that's when you fall back down for the next leg lower. So I believe we're pretty close. This morning I talked about commodities. First thing this morning I put that out. I don't know, 20 minutes into the open, how it looked like the commodities were catching a bid this morning. And I'm very focused on commodities and the inflation trade. I've been talking about that for a while. I think the inflation trade is going to last for a decade. All right, I think we're going to have waves of inflation. that are going to continue to persist, prices rising. So we saw prices fall, but again, we're seeing prices rise. I like, like wheat is interesting. I think I pointed that one out. You can see here, this is the uptrend or the bull market we've been in on wheat. And there we are right there at support. So for me, that's a buy. I buy at support. We have bullish divergence right here. There it is. So that was a little spike divergent low. Bullish divergence at support in a bull market. I want to buy. And the thing is that if wheat is going to hold up and rally, some of these other commodities are likely going to as well. And if the commodities rise, inflation rises, the CPI goes back up, the Fed has to continue to tighten. So it's the Fed is trying to walk this fine line where they want to walk the market lower. They don't want it to crash. They want to walk the market lower. And again, I think they're going to continue to do that. So you can see here on the SPY, if you want to walk the market lower, you don't want it to just crash right down here and just keep going down. All right. You need these rallies along the way, and then you walk it lower. Okay. So that is where I think we're heading. Now the SPY has a little more potential upside. We could pop up to this 435. All right. That is the potential downtrend on the SPY, and the 200's up there. So that might be where we go pretty quickly. All right. We might just pop up there in the next, maybe this week and then roll over. But again, everybody sees that level, so they might step in early. I don't know. All I know is, we're close to resistance, and on pretty much all my charts, we've got negative divergence. That is continuing to build across the board. None of it's been taken out. None of the negative divergence has been taken out. So from my perspective, lower. I think we go lower, guys. And I don't know if that's tomorrow or this week, but I think it's, if you, in the next month, I think we're a lot lower. So sector analysis, XLY. You'll see here, again, what changed today? All right, for all the bullish headlines and everybody felt bullish, that's because most people own the tech stocks, guys. And when FANG rallies, they haven't sold those things. Until you see retail just coughing those things up and just puking up their shares of the beloved FANG stocks, this bear market's not over, in my opinion. So when you see those FANGs rally, that's when you hear retail kind of pound their chest. XLY today rallied right into resistance. No change. All right, right there, right into resistance. Looking at the hourly chart, negative divergence continues to build. All right, and today kind of, basically a divergent high. Maybe not quite. We could pop up and hit it again, but close enough in the area. We should get rejected here. Whether it's tomorrow or next week, I don't know that. Okay, I can be wrong for a few days as we kind of chop around and grind around, but I'm looking for the big move in the next trend. All right, XLI is another one I've been looking at. That one, yeah, okay, so we hit the 200. So we'll see. Shouldn't really go much beyond that, all right? I don't really want to see this above the 200. Maybe one day above the 200. I really don't want to see much beyond that. It shouldn't really go much higher. So look for this to fail pretty soon. And we'll see the signs in the other markets. I suspect the Fed's going to come out and talk hawkish. I don't know when they're due to report next, but I suspect they'll start to come out and talk hawkish, or we'll see. Maybe they'll just sit idle for a couple weeks. And then as the commodities rally, they'll start to talk hawkish in the future. Who knows? XLF almost to resistance here. I see big resistance on XLF right around 35.27. That's big resistance. If I go to the weekly chart, you'll notice on XLF that I've got this trend line here. All right, this is coming off the 2011 lows. So here's your Great Recession lows. And then we started a trend basically in 2011. Support, 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 support. We broke, okay? We broke in this is COVID, all right? And once it hit that trend line, boom, reaction. It was resistance. It wasn't until the Fed basically pumped this thing up just through forced appreciation, through money printing, did it recover. And then once it recovered, boom, tested it as support. Okay, we're back below that now. So you can see, boom, big sell signal as you break down through it. And we're right there. So I do think that's where we get rejected from. The upside on this one from where we're at is potentially about another 2% maybe, we'll call it. So 2% potential upside, and I think the downside is taking out the recent lows down here. Likely going down to something like this at about 29 or so, right about in there. That looks like a key level. So that's where I think we go, guys, on XLF. Whether we run up and hit that trend line first, I don't know. It's possible, but again, 2% upside and the downside from right now is about 17%. Risk reward is not favorable to be long, okay? All right, that's really it that I have for this video. Just wanted to kind of set the stage for what I'm anticipating. So over the next few days, if we kind of grind around and chop around, it's likely going to be kind of the same story on the general markets. But what I will do is look for some additional trade ideas. I think there's probably like Ford is kind of interesting. I'm kind of looking at that. We might have seen almost the highs or maybe the highs of Ford. And maybe trade down to this 793. I don't know yet. I got to look at it a little bit more, but that was one. And then I know we've been looking at this one here, MELI. There we are, just above the 200. But again, this looks like an island cluster reversal setup. It doesn't necessarily have to be, but nothing actionable there, but we'll keep an eye on that one. Disney's reporting. They're favorable after earnings, so it looks like they're up. But here's the thing. I have a potential trend line. I think it's going to hold, but you can see here, resistance, resistance. I've got two reactions. Kind of need to see that third one. And you can see after in earnings, we're trading right in here. So this might sell down tomorrow. Maybe what they'll do is run it up slightly, okay? So they'll open probably right around where we're at, and then they'll run it up to about 122.02. All right, and then look for the sellers to show up. So you might want to set that on your calendar or set that up on your chart. There might be a trade there, and then I'd probably look for the sellers to show up and run down and fill the gap. Well, that could be a day trade right there, 113. All right, but again, I don't know if that trade's going to pan out. I have to see how it behaves tomorrow. What I'll be looking for is, do they run it up and then does it get sold into? It's objective to short there. It's not the cleanest trend line, but I think it's worth the risk. All right, and that's all I got, guys. So drop me a thumbs up. Join the membership. If you want some added value there, I'm hopefully able to provide that. And then if you haven't done so already, I really urge you to take that course. For one, it's going to help you learn the skill set that you need to follow along and be able to anticipate these trades so you don't just get caught up in the emotion and the price action. Retail rookies follow price action. When things go up, they're happy. When things go down, they're sad. And that's it. They just follow. All right. To make money in the market, you can't really follow. You have to anticipate where it's going to go in the future. The market's forward looking, so it's going to look to the future to where it goes next. And that's the point that I'm trying to make. So take that course. It's beneficial for you. It helps me out as well. So I appreciate that. It's nice to make some money from some of the information that I have and some of the knowledge that I can get. Okay. I will catch you guys tomorrow. Bye.